Hi and welcome back to this episode of Business Bliss, the vlog series where we discuss different topics and have some tips for entrepreneurs and business owners on how they can run their business in a better way.
Absolutely. And today we're going to talk about finding financing for your business. We have been talking about the different cash flow uh, challenges and solutions. And today we will talk about financing and how to raise and find the money to have your business growing.
So there are traditional and non-traditional ways of raising capital.
Well, the most natural thing to do would be to run to the bank and ask them for a loan. And you would think that the bank says, "Oh, you're a business owner, you have a great idea, and we love your idea, and we will lend you the money." But
Is that easy?
no, it doesn't happen that way usually. The once you have invested your own money, you probably would have to go to the non-traditional ways of non-traditional financing, because the bank is going to ask you to have been in business a certain amount of time, and they want to see that you're proof that you have customers, that you have traction, that you're generating profits, and all of that will not happen probably during the first years of your business. So you will have to go to other sources of capital.
So you have your own capital and then you go and find love money, as you call it.
Yeah.
So love money from family and friends. So what's the pros and cons with that?
Of course, the cons are that you probably will have to find some new people to spend Christmas next year. Then, okay, you exhausted this resource, or you just don't want to do it. Then the first thing I would look for is the government money. There are many grants and the subsidies. If you're in luck, if you're a woman in business, if you are incurring in the environmental industry, yeah, innovation. There are so many different areas where the government wants people to invest nowadays. The third source of money then is the non-traditional financing in a more formal way.
So at this early stage, many of the banks will still not lend you money because they are risk averse. You don't have so long history of doing business, and you can't really prove and give security for the bank loans. So you need to go to this non-traditional financing options.
Well, the way non-traditional financing companies operate is that they will look very close into your company. So they will do a thorough due diligence on your company, just to make sure that your business is legitimate, that you are set for success, and that they will not lose the money that they're lending you. Most likely, they will base the loan on your assets. So, what kind of assets, you might ask? It is basically your accounts receivable, your inventory, your equipment that you might need or you're looking to finance. Um,
Can it
and
be real estate?
the real estate, of course, your assets. So let's start with the easy one, the factoring. Factoring is a very simple way to convert your invoices into cash at a much faster rate. So what do? You have money sitting in your accounts receivable. You have invoices that you haven't recovered, or you have a regular amount of money that is just sitting in your accounts receivable because you're just waiting for your customers to pay. So you can get a loan based on that, or you can sell your receivables, and that way your cash flow is going to be improved, exponentially. And that is one way. And it comes at a cost, but it costs you part of your margin, but it can be a great solution. One of the things that I like the most about it is that the size of the facility will grow together with your sales. There is actually no limit as long as you have customers that are credit worthy.
So if I don't have if I don't have a balance sheet or a history that I can be proud of to show you, which I normally would want to show to a bank, you know, it can still be okay, because if I have good paying or customers that have a good payment history or good credit worthiness, that's more important really than my credit worthiness.
Correct. You can also have financing based on your inventory. Hopefully, you don't have a lot in inventory. You have a high rotation, but there are companies that need to have large amounts of inventory, and they can borrow based on that. There is also the purchase order financing solution, and this is a great solution for companies that are receiving purchase orders from large companies and they need to deliver. There are companies that do purchase order financing, the non-traditional financing companies or alternative financing companies, and they will lend you money based on your purchase orders.
So let's say that I have a business going. Let's say I'm importing or I'm sourcing something from a supplier in order to produce whatever am I selling to my end customers. So if I'm getting a very large order from a customer, and I don't have the money to invest in whatever I need to buy in order to produce my goods and services, that's when I need purchase order financing.
Yeah. And then the financing company will pay your supplier according to the terms they need, and they provided the financing, and they will be paid once you deliver the goods and you have delivered under the purchase order. So it's a great solution.
So basically, this alternative financing company, they are basically helping you to manage the whole cash cycle from the time I buy my goods that I need in order to when I sell it and then invoice the customer. Is that correct?
Yes. Okay. Then, of course, leasing is a great solution. So the leasing solution can be a good one for companies that need to get a lot of equipment. Now, if your company already has the equipment and is in urgent need of cash, there is a solution called leaseback that you can find a leasing company to purchase the equipment from you. So you don't own even if you owned it before, you don't own it anymore. A company comes and purchases the equipment and then leases the equipment back to you. So you can liberate a lot of cash that way, and then you make just the leasing payments every month for that equipment, and you don't have that capital expenditure at once.
And you get it off your books as well.
Yeah, exactly. So that is a great solution as well. So there are many leasing solutions. So we have talked about factoring, inventory financing, purchase order financing, leasing, and now, of course, the king of the assets, that is your real estate. If you own a piece of land where your business operates, or that you can use as collateral, well, that is a great solution. So it also needs to adjust, to what you need the money for. And if you need working capital, normally you would want to have a solution that is a working capital solution. So it's a short-term financing solution. You don't want to use a 30-year solution to solve short-term problem, or the opposite. So you want the solution, the problem and the solution to match in timing. So don't get stuck if the bank says no to you. There are many different solutions that you can find. The important thing is that you know that you have options. You don't get stuck in a no, and find out. Call us, and we can help you find a solution for your business. So that was it for this video. And next time, we're going to talk about raising equity.
Don't miss the links below for more information, as well as our free cash cycle guide with detailed cash flow strategies for your business.